It's very timely, I think. The Iran war. We're at war. There's no other way to put it. No matter how people are describing and maybe trying to come with semantics saying we're not at war, we're at war. And that war has two results, probably. One is that the war ends very quickly. And if that happens, I think about it, an analogy is like a boil. And I've had some boils, not many, but I've had boils. It's painful in the beginning. It gets popped. You press the pus out of it, and a day or two later, everything's back to normal. If the war ends quickly, there's not much that you have to worry about doing. You have some volatility, you have some oil prices going up, but if it ends, oil prices will get back to where they are, and the whole economy will move on as if almost nothing happens. But what happens if it drags on, like the Vietnam War, the Iraq War, or the war in Afghanistan? I mean, if you think about Iran, it's a very weak country. And not only is Iran weak, but given the Israeli-Hamas situation, Iran's proxies, Hamas, Hezbollah, Houthis, and the others, they're all very weak too. So what we're dealing with is a very weak country. And what you would think is with the presence and the power of the United States and our military capabilities, it should be a very short war. It should end very, very quickly. But I want you to remember, as we got into Iraq with George W. Bush, the second Bush, remember after a few days, he was on the aircraft carrier and declared victory? We won. We did it. No, we didn't. That war drug on and on. Iraq was weak. Vietnam was weak. Afghanistan was weak. But think of that. They drug on and on and on. So what do you do if it continues to go on and on? I think you have three choices if that happens. You have three choices. Number one, you can do nothing and hope. Right? Just do nothing. Sit back and wait for things to happen and hope things are going to go on. If you had a financial advisor before, during the inflationary time period, what did they say? Just hang on. Just hang on. And in some cases, that really worked. It moved things along, and it went well. But I can take you back to the 1970s and 1980s. I had a client, Christine. Christine's husband died in 1978. Christine had the insurance money, her own salary, and eventually her own pension. And so she was set financially, or so it seemed, in 1978. But by 1986, inflation had so eaten away at what she had, her income, that what cost $1 in 1978 was costing $3 in 1986. Inflation had done that for the things that people bought, for the necessities, for food, for groceries, the price of Coke, the price of a stamp. All those things had increased significantly. And she found herself in desperate financial situation just by being prepared, being ready in 1978, doing nothing and hoping everything was going to be okay. You know, maybe that's some people will do that. Other people have the choice and will make the choice to react emotionally after the markets move. When the markets begin to dive, they'll begin to make changes. They'll begin to look at what's going on. Right now, you have oil prices increasing. You have inflation kicking up. You have gasoline prices kicking up. You know, reacting then is better than doing nothing. You know, but I'm reminded of how institutional money managers think about you, think about retail investors, think about financial advisors. Institutional money managers, if you read about what is smart money doing, you hear on TV, what is smart money doing? you read in news articles or in the financial press. What is smart money doing? Smart money is institutional investors, institutional money managers, and they love retail and they love financial advisors. And you know what? Because for every happy seller, there's a happy buyer. And they know what they want to sell, retail buyers are going to buy. They know what they want to buy, retail investors are going to sell. They look at what is the money, that's retail investors, and that's financial advisors. I have to say, for my clients, we're outperforming the money managers. So I consider my clients the brilliant investors. But that's anyway, beyond that. The third choice that people have is to prepare now, calmly and deliberately, considering what's going on and how to take advantage of it. And that means you have to look at the economic and market impact of what's going on. You have to look at what's happening. Number one, you have to consider inflation because inflation is a real concern right now. 20% to 30% of oil and 20% of natural gas flows through the Persian Sea at the Strait of Hormuz. And you're starting to hear that in what's the news, the Strait of Hormuz. If you look at it, the Persian Gulf looks like a sea, like a big lake, but then it comes down to a narrow passage called the Strait of Hormuz. And that is a strait that Iran has spent a great deal of time thinking about and planning for, and intentionally says they intend to shut it down. They intend to shut down that shipping. They intend to burn up every ship that passes through with oil. That puts a great deal of pressure on Europe, where a lot of oil is delivered to, a lot of natural gas, the source. That's pushed oil prices up. And it's only just beginning because right now we haven't seen the real shortages. Right now we're seeing oil prices in the mid 80s. But what about oil prices of 100 or 120 or 150 bucks a barrel? What does that do to gasoline? What does it do to manufacturing? What does it do in terms of the impact of the economy? Very definitely inflationary. Very definitely. But you also have to think, secondly, about household spending. If we look at the economy, economists call the economy we're living in today the K economy. Think about the letter K with one leg going down and one leg going up. What we see in the American economy is that 2/3 of the people are struggling to make ends meet. Inflation is eating away, as I said about Christine before, inflation is eating away economically. They're making choices. Do I buy my medication or do I buy food? That's a reality for a lot of people in this country. I don't see that. I happen to be on that upper leg. And I imagine that the people that are listening to this podcast, most are on that upper leg. We have financial means, we have income coming in, and we're on that upper leg. But what happens if that spending slows down? What happens as this war drags on and on and on when that spending slows down? What happens when we become worried about where we're going to take a vacation? What happens when we quit buying clothes, when we quit going to restaurants, or when we downgrade? Instead of going to fine dining, we go to casual dining. What happens to household spending? Because the probability is with inflation kicking in, household spending will do that. And as inflation kicks in, as these things take place, business investment begins to drop off. You've listened to President Trump talk about the commitments of a lot of people to put money into the United States. And look at what's going on with AI and with data centers. There was a meeting in the White House with President Trump and the big tech people who are building data centers, and he asked them to commit to generating their own electricity. Figure out how you can generate your own electricity without using public utilities. What happens if that begins to dry up? What happens to trade? Think about what's going on in the world today with the tariffs, and think about Canada and 60 other nations that are now discussing and trying to put together a free trade agreement. Nations from Asia, from Europe, from Australia, from all those countries, 60 countries, looking to put together a free trade agreement with China involved, but with the United States excluded. A free trade agreement, making their products cheaper and putting things together for diverting supplies from buying from the US, instead sourcing from other nations, other of those 60 nations. Trade could change. And as this war drags on, there's going to be more and more an emphasis for free trade. Think about the government spending. It's costing us $1 billion a day to do what we're doing today. If that drags on, that spending will probably increase. It'll go beyond $1 billion to $1.5 to $2 to $3 to $4 billion a day to keep that war going. That's inflationary because it's pumping that money into the economy. And inflation is driven by two things. Inflation is either too many dollars chasing too few goods, and that's, well, that side. Let's talk just about that side. When you have government spending, you have too many dollars chasing too few goods. That's an inflationary impact. Supply chains. We learned from COVID, using supply chains from around the world and complicated supply chains, it's better to nationalize, or not to nationalize, but to bring things onshore instead of offshore. But there's still a lot of supply chains that are offshore. Those are going to be affected, especially if those nations come together and develop the free trade agreement for those nations, excluding the US. What we're seeing is a real realignment of the world order. From the United States being the heavy economic power, China wants to replace us as the leading economic power. And as this war drags on, and as these things are happening, certainly there's going to be something. And the final thing to think about is the black swan event. You know, if you think about Iran, for decades, they've had an assassination machine. They've assassinated people in dozens and dozens of countries. They recruit non-Iranians to be part of their assassination team. They recruit bikers. They recruit criminals. So just looking at Iranian nationals or Iranian heritage does not necessarily get you to the assassination teams. During Trump's first term, Iran tried to assassinate Trump. They tried to assassinate John Bolton and Pompeo. They were unsuccessful because we were very aware, the United States was very aware of those teams that were set up to assassinate. Those people were arrested and have gone to trial. But now think about what's going on. At the very beginning, before I started this whole thing on Iran, I talked about Ecuador. And we started a military action in Ecuador. Guayaquil in Ecuador has become the center of drug trade. And we're now going after the cartels in Guayaquil as part and in conjunction with the Ecuadorian government. Something that really needs to be done. But that means that also puts us at war with those cartels. The main cartel in Guayaquil is the Albanian cartel. But there's the Mexican cartels. There are the Spanish cartels. There are the Mideast cartels. All those cartels and ISIS and Al-Qaeda can furnish people for Iran to do some nasty things in the US. And maybe it's far-fetched what I say. Maybe it's far-fetched to talk about a dirty bomb, but that's a possibility. Iran knows there's two things that really are the soft belly button for President Trump. One is energy and financials, and the second thing is the stock market. They are targeting those two things. Very much targeting energy, inflation, and the stock market. And I say a dirty bomb. You know what? We've lost 3 to 6 nuclear weapons. Look at it. Google it. We lost those. The United States has lost 3 to 6 nuclear weapons. Some offshore, some not. But in 2018, there were a couple officials from the Department of Energy that stopped overnight at a hotel in San Antonio, and they were carrying plutonium and cesium in their car. 2018, it was stolen. Check it out, Google it. With that, you can make a crude nuclear bomb. Where it is, nobody knows. Is it really a concern? Probability maybe less than 1%, but it's not zero. It's not zero. So as I look at this and what's happening, people have 3 choices. You can do nothing and hope that everything's going to be fine. The war's going to end quickly. Or if it drags on, the economy will go on. It went on when we were in Vietnam. It went on when we were in Iraq. It went on when we were in Afghanistan. You can just do nothing and hope that everything's going to work. Or you can react emotionally and only react if the markets move. Or really, you can begin to prepare now, calmly and deliberately, knowing that Iran, if they can do anything, are going to target energy, which targets inflation, and they're going to target the stock market because Donald Trump talks about the stock market all the time. Which one will you choose? If you're a bit like me, I think you'd rather be proactive. I think by listening to this presentation, you're probably proactive and you probably want to do number 3. Hopefully you do. And hopefully, if everything goes smoothly and if the war ends quickly, the preparations you make now will just be something that was done and you'll continue to have good results anyway. What are you going to choose? You have 3 choices. Do nothing and hope. React emotionally and wait for things to happen and then react? Or do you begin to prepare now? Choice is yours. The choice is yours. What are you going to do? And with that, let me see. Questions and discussion. What do you think?
All right, hey everybody, it's Chris Prouty and I am back, and that was super informative, Mike. I'm here to moderate the webinar chat, so if you do have questions or comments that you'd like Mike to address, you can pop them in the webinar chat right now. Mike, we'll just give people a minute to do that. Mike, somebody asks what likelihood you would give the conflict or the war of lasting versus ending quickly. What percentage would you say?
Wars are easy to start. They're hard to end. You know, I keep coming back to thinking about George W. Bush standing on the aircraft carrier saying, "We've won. I'm declaring victory." Even President Trump says it's going to continue for weeks. It's probably going to continue for months and months and months. We've been here before. Wars are easy to start and they're tough to end. My opinion is there's not a great probability that it's going to end quickly. And if it doesn't end quickly, doesn't it make sense to prepare now for a long term?
Like somebody asks about the timing of making changes and timing that with how the market is. So is it too late to make changes?
Oh, it's never too late to make changes. The best time to make changes was yesterday. The next best time is today.
Yeah.
Um, it's thinking through what's going on. You know, we I've been examining my client portfolios uh, since 2023 um, in terms of inflation. 2020 or 28 2016 was when I first started looking at inflation as a potential and reevaluating it and continuing to reevaluate now. I know there's some things that I'm ready to sell at almost any time, and there's a couple things that I buy, but I'm aware and I'm ready to move proactively rather than reactively.
Mike, somebody says, I'm thinking about retiring in 3 years. How should I specifically be thinking about this?
One, think about the 1960s, 70s, and 80s and 93. We had roaring inflation. And what's the probability of that coming back? I think the probability is better than 50-50. So if you're thinking about retiring in 3 years, it's time to think about what do I need to do to go through a high bout of inflation. And if you're able to deal with that and build the portfolio, it doesn't really make that much difference. If you're wrong, the fact is you end up with more money than you need. Think about this. This is preparation. Being here. Would you rather be here? This is the average financial advisor, as based on a number of studies that have been done by Investment News, by BlackRock, by Schwab. This is where the average financial advisor is done. What we've done at Adams Financial Concepts is we're here. This is what our clients are. This is a composite of our client accounts. This is where we are. Dealing with inflation. Would you rather be here or here? And it begins way back here. So even if you're here now, the idea is to grow. And I always have to put out past performance is no guarantee of future performance. But
Mike, somebody says the US produces and refines enough, I think they mean oil, enough for us and others, and they're interested in your comments.
oh, we do. But remember, oil is an internationally traded commodity. And when the shortage of oil goes up overseas, as it has a greater impact in Europe than it does here. It has a greater impact in China. But still, if you're a company that's producing oil, are you going to, if you have a chance to sell oil for $120 a barrel overseas or sell it to the US, are you that patriotic that you're willing to sell in the US at $70 instead of overseas at 120? I don't think many corporations are that patriotic. And if they are, the shareholders are going to remove them. I mean, um, the president can declare a national emergency and take control of oil production. That creates a whole new set of problems. I mean, anyway.
Mike, another question. I heard that there is a worldwide silver shortage. Should I invest in silver? I heard it's consumed in weapons and solar cells.
So when I hear about people talking about shortages like that, that um, I'm reminded of an old joke of the oil prospector who gets to heaven and says to St. Peter, and St. Peter says, you know, you're an oil prospector, you're an oilman. And the fact is, our sector for oil prospectors and oilmen is completely full. And we have no choice that you can be here in heaven. You're going to have to go to the other place. You're going to have to go to hell. And the oil prospector thinks about it and thinks about it and finally says, can I say something? Can I yell something? St. Peter says, okay. And the oilman cups his hands and he yells, oil's been discovered in hell. And there's suddenly a rush. All the people that were in that section of heaven rush out and are headed to hell.
No.
And St. Peter says, you know what? That section's now empty. You're welcome to go in. And the prospector says, thinking about it, that rumor might be true. I think I'll go to hell. Um, the rumors about silver being in short supply and other things being in short supply, those tend to be rumors. And I can remember back when the Hunt brothers wanted to capture and corner the silver market, and they bought silver. I mean, we had silver place settings, a dozen place settings that we had. And my wife says, do you know what these are selling for now? We could sell these. I said, no. The reality is, when the Hunt brothers thought they had the silver market cornered, silver poured out of everywhere, poured out of India. People that had been buying silver in families as a hedge against geopolitical risk, silver in India, in China, just poured out. And that whole thing with the Hunt brothers completely collapsed. So buying things because you heard a rumor is like hearing and starting a rumor that there's oil in hell.
Mm.
No. The best thing is to look for solid investments that are going to be here for a long time.
So then, Mike, the follow-on question is about investing in gold, or is the price up too much already?
Gold is an inflation hedge, as is silver. And to invest a portion of the portfolio can make some sense, especially if you really believe that inflation is going to take off, and I do. But gold has no earnings, has no revenues. It's going to be a speculative asset, and it should be treated as that.
Mike, the next question is asking about software stocks, and in particular Okta, which is a software company that handles identity and access. So, is it time to buy more OKTA or software stock in general?
No, I will probably do a program on it. I talked before about AI and synthetic biology being the $100 trillion potential. You know that Block, the old Square company, cash, use your phone to buy things. They laid off half of their employees. I happen to have a son-in-law who's one of the top tech people at Salesforce. My grandson is an up-and-comer at AWS. And he explains how he programs now. He's not a programmer, he's a software engineer now. That means that he figures out the programming to be done, and then he turns it into AI, and AI does the programming. No human interference. Just do this program, and this is the result I want. and AI does it. Software companies are going to go through a complete change with what's happening with AI. AI is rewriting software and will continue to rewrite software. If you're doing software companies, and we do have software companies in our portfolios, know that it's not a matter of replacing software engineers or software programmers with AI. They have to have something over and above just the software. They have to have the application. So anyway, I'll do
Thanks
it
for
for
that.
everybody.
Thanks for that insight. And for everybody who's here into the webinar chat, I just put two different links. The first link is Mike's direct email address. If you have questions and you'd like to talk to him directly, you can email him there. That goes right to his inbox. And I know that he checks and responds to every single message that he gets. So that email is there for you to send him a message. And then I also included a link for the replay of this and all of our previous broadcasts. You can find that on the YouTube channel. And there is a link directly to the main page of the YouTube channel there. If you find value in the content that has been shared with you, it would mean a lot to us if you would subscribe to the channel as well, so that you can jump the line and get first alert whenever we post new content. Mike, with that, I don't have any other questions queued up.
Well, let's move on. Next week, let's move to what's coming next week is brace yourself, the coming surge in medical cost and premiums that may crush your retirement plan.
Oof.
I think, it's again, people have a choice of what they do. I think you can respond to both of these in the same way this week and next week. But what's going on with medical cost? What's going on with premiums? And what does it have to do if you're planning for retirement or if you're in retirement? That's what we're going to be talking about next week.
Mike, are you telling me that the cost of medical is going to go up even more?
And let me add one comment to it. One of the fastest growing problems in, I don't know. Anyway, one of the problems that's really growing rapidly is people being evicted from assisted living, running out of money and being evicted. Google it, and you'll find you can Google template letters for how to evict people from assisted living.
Mm.
It's not a small problem. And coming back to black swans, I'll share a story next week about one of those black swans and how it affected one of my clients. So that's coming next week. I think it's worthwhile.
And so, Mike, into the Q&A, somebody asks where to invest with increased medical costs. And I think that's one of the questions that you're going to be answering next week.
It is.
Yeah. So let's make sure I'll
Right.
capture the name. I'll make sure you get an invitation to next week's broadcast so you can be here to get that question answered.
We had one other comment that came in early. We had one of the viewers that asked if he'd be able to invite others to the webinar and how would he do it. So if you would like to invite other people to this webinar, let us know. We will send you an email on Monday or Tuesday of next week when we know what the registration link is.
Yep.
And we'd be happy to have you invite other people.
So if you came to us through social media, if you registered for this through social media, we've got your email address, so we'll be inviting you to future broadcasts. Simply, you could forward that email along to other people if you'd like to invite them. And super easy to do. So you can keep an eye on your email on Monday and you'll get an email about the coming surge in medical costs. And in that email will be the invitation for the workshop for the podcast that week. All you have to do is forward that along.
So with that, have a wonderful week. I mean, this has been such a downer, but anyway, it shouldn't be a downer. You should look back 6 months from now and say, I was prepared. With that, have a wonderful week and do come back and brace yourself for what we talk about next week. Take care.